Good morning, everyone. Welcome to this first in a series of additional services that I'm going to provide because of particular events that have really started unfolding pretty rapidly now. So I just want to explain my objective in what I'm doing here. I want to create awareness of what is happening and what is rapidly evolving in global markets at the moment. There's been a lot happen in the last 6 to 8 weeks, and I'm not sure that the financial media has really picked up on this properly yet, as indeed they really do. So the important thing is that what is happening at the moment is going to have very, very significant impacts on all of us. Most people are going to have no choice but to just go along with the mass thinking, and that will tend to lag events significantly. It always does. And so most people are going to be very severely disadvantaged by the rapid changes in the financial world that are occurring. And I believe they're pretty much set in train now, and they're unstoppable. It's always been that way. Most people are going to be disadvantaged, and I guess it always will. So I'm just trying to do my bit to create some very essential awareness so that as many people as possible can take the appropriate actions that they need to. Now, what's already unfolding has got the potential to be quite disastrous. Now, I don't say that to grab a headline because that's not my style. If you've been watching my videos for some time, you know that that's not the case. I leave that sort of attention headline grabbing to others to do. But just think about this. Right now, 20% of the world's government borrowing is at negative interest rates. So in other words, the people that are lodging money with governments by buying their bonds are effectively getting a negative return. They're paying the money to do it. And that percentage is growing very quickly. So how's that going to play out? I mean, does that make one little bit of sense to anyone? And how are people who are going to be relying on fixed interest income in the future, how are they going to survive in a world where we've got incredibly low rates, or in some cases, we've got negative rates? We're in the middle of a massive financial experiment by central banks. Uh, it's never been done before. No one's got any idea how it's going to play out, and it's highly likely that there's going to be some severe unintended consequences. And I don't think I'm overstating that situation. So I'm going to continue with the weekend stock updates that I've been doing now for many years. But these videos are going to mark the start of an additional free service which I'm going to provide. It's not going to be schedule driven, so I'm not going to do it on a particular day. It's going to be driven by events that happen, things that I see, things that I think that you should know about quickly. You can probably expect maybe one or two updates a week, but again, it will happen when events happen. Some videos will be like this with a little bit more detail. Some will just be very, very sharp and short posts that will go through the social media network. So with all that intro done, let's get into today's topic, and that is what is the breakout in gold, which has been really substantial, or more correctly, I should say, the breakout in gold stocks. What is that telling us? So let's get on and have a look, because I think this is absolutely critical material. So this is what you need to know, in my opinion. You need to not only know what's happening, and you can get that from the media, I guess, although they don't do a very good job of covering it, but you need to know why. There are significant long-term changes in global finance. Central banks, as you are probably aware, have been engaging an experiment that's just getting wilder and wackier as the months go by. We started off with lowering interest rates, and then the buying of government debt, and it's just got bigger and bigger and bigger, and it's totally unproven. And what they've done in the last handful of weeks in moving significantly to negative interest rates is something that really turns the law of economics and the laws of finance on its head. And I'm sure that they have no idea how it's going to play out. They're just playing whatever card they think they can. And I just touched a little bit earlier on the craziness of negative interest rate policy, or as it's being called now, NERP. you've just got to step back and think about where that could possibly go. It's insane. Now, what central banks are trying to do with negative interest rates is to encourage commercial banks to lend the money rather than park it with the central bank. So they're actually penalising them if they wanted to lodge money, and we're talking, hundreds of millions and billions of dollars here. So that's what they're trying to do. But what is really happening is that no one wants to borrow. Consumers don't want to borrow because they're nervous. They're seeing these very low rates. They're seeing stock market volatility, so they don't really want to borrow. They're in full-on saving mode since 2008. Businesses don't really want to borrow because they don't see the growth opportunities anymore in a very low growth and low inflation economic world that we're in these days. So it's fine for central banks to push back and try and force money to be borrowed and to try and get people to increase debt. But you can lead a horse to water, but you can't make it drink, and that's what's happening. And that's why their policies are really failing. The consequences for you and I are that there are a great many unknowns. And where there's a lot of unknowns, there are a lot of risks. Now, as I said before, I don't think anyone understands how this is going to play out, but you've just got to sit back and think for a minute that some of the consequences, if not a lot of them, are going to be extremely bad. So at the moment, we've got ultra low returns from fixed interest, and that's penalising people already in retirement mode. And also in a very low growth, low inflation world, then the average return from stocks is going to be a lot lower than what it would be in a different kind of growth environment. I think that just kind of makes sense. So where is it that savers can go to get a decent return? And if central banks are continuing to push the other way by increasingly going to ultra low and negative interest rates, then certainly the trend is showing no signs of reversing. So the response of the smart money, inevitably, whenever things like this happen, there are negative issues, but there are also positives, and there are opportunities. And so the smart money always looks around for opportunities. And that's why there's been a big surge of buying into gold and into gold stocks. Now, if you look at the world's biggest ETF, which is GLD, which holds an ounce of gold, for every dollar of funds that are put into it, the number of tons of gold that was in that fund in 2012 was about 1,350 tons. Over the ensuing 4 years, that dropped to about 650 tons, so pretty much dropped in half. And that was consistent with the price of gold dropping and the fact that people would have been liquidating their holdings. But in the last 3 months, the amount of gold in that GLD fund has gone from 650 tons up to 850 tons. Now, this is real. This is real money buying physical gold. This is not speculation. This is not the paper price just being tugged around. There's 200 tons worth of gold has been bought by someone, and those someones are pretty big players. And as a consequence, there's been a huge surge in gold stocks, which were just incredibly undervalued compared to the price of gold anyway. So we really should see, and are seeing, a massive rebound in gold stocks without the price of gold needing to move at all. And I think that's a really important concept for everyone to understand. The gold stock ratio was about 300% below its long-term average. Now, it might take years to get back to its long-term average, but gold stocks could easily rise 300% without gold moving, just to get back to a situation of normality. So there certainly are some very, very substantial signs of a new bull market in precious metals. Gold stocks almost always lead the underlying. We then see, and I'm going to take a look at some charts in a minute, we then see silver following, and that's just starting to look like it's happening now, which is really why I want to get this video out right now. And then, of course, we see the underlying metals start to follow along as well. So after 4 years of a bear market in precious metals and an absolutely severe bear market, clearly the character of those markets have changed, as you'll see on the charts in just a minute. And just to paint the picture of where this could go, GDX, which is the world's main gold index that holds the top 15 to 20 gold stocks, between 2008 and 2011, which was the last big bull market in gold, GDX rose by 400%. Now, there's no guarantees that that's going to happen again. It could be more, could be less. But just to give you an idea of what happens when a bull market gets underway. So let me take a look at some charts. So we'll start first of all with gold. So this is gold in US dollars. And I'll just pan back to give you a really big picture view. So we've gone back now to the start of the bull market in 2000. You can see that the gold price rose from around $250, got up to nearly $2,000, and then we've had a 4-year and very significant correction. Now you'll notice that we've now, several things have happened. We had a very clear downtrend in place through here, through all these highs. We've now clearly broken that uptrend for the first time in quite some time. We also took out highs here and here, and we're not far away. We need to clear this next high at around 1300. But we've also seen the 50-day moving average, which is this blue line through here. That's crossed above the 200-day moving average. And that's the first time that has happened since you've really got to go back to 2014 when we had a bit of a false start. But clearly the character of the gold market has changed. But look, really gold hasn't started to move yet. And let me reiterate that to do really well in gold stocks, we don't actually need the price of gold to go very far at all. We just need it not to collapse. Let's look at silver. Silver hasn't really done as much as gold yet, but then that's normal. That's the way that it works. Gold stocks move first, then gold starts to move, and then silver starts to move, and of course the stocks along with it. So we're just showing some signs, basically just in the last 2 days, really, that silver is finally now starting to break out. It's broken above this high here last night. So this information is absolutely as fresh as I can make it for you. So some good signs there. Let's look at GDX. So this is the gold stock index. So you can see clearly the 50-day moving average is clearly cut across the 200. We've got a very, very strong uptrend. We didn't get any form of retracement, and I think that's really important, before the price took off again. All we did was to form a little triangle in here that was really just a pause and then off again. This is very, very powerful and impressive action, and you can see the volume, a big average increase in the volume. You can see it a little even more clearly if we look at the junior index. Now this is GDXJ, the index covering the juniors, but really they're called juniors, but they're still significant producers. There's a really, really important support and resistance line that we can construct that picks up lows in 2013, highs in 2014 and 15, and then it caused the index to pause for a period of several weeks, and then it busted out just a few days ago. So wherever you look, the signs really are extremely encouraging. And let me go back to the start of what I said. It's what really this is telling us. It's telling us that a lot of people increasingly are getting concerned about the health of the global financial system, and they're moving to gold. They're going to gold and gold stocks as part of, not just, this is not speculation. This is people adopting gold and gold stocks as part of their risk management strategy. So you shouldn't see this as delving in risky gold stocks. Now, sure, some of them are, a lot of them are, but there's a lot of gold stocks out there, the good producers that are just outstanding businesses with high profit margins. So it's really important that you consider what's going on and start to take some actions if you need to. For anyone that wants any more information in between these things coming out, there's my contact details. But look, just to wrap it up, these are going to come out, as I said earlier, in two forms. One will be a video with more details, such as this, but some will just come out through social media. They'll be very quick. They might only be a minute or two. So if you want to be a part of this ongoing service, then go to our website, which is listed there, and you can click to follow me on Facebook and LinkedIn. And yeah, let's all share in the information that I'm going to try and make as concise and relevant for you as possible. So that's it for this opening salvo. I'll be talking to you regularly. Cheers.